Welcome to Momentum Monday, guys.
Here I am, live from the canals of Amsterdam.
Live from the world capital of cannabis. Right?
It's not, I wouldn't know, Ivan. Very much. You can see I'm working. It's Sunday, and instead of smoking, I'm with you. So let's get right to it. How's the weather in San Diego?
It was sunny 10 minutes ago, so not anymore.
All right, let's get right to the markets. Interesting stuff. Interesting week. Got a lot of ideas, but I want to walk me through everything.
All right, let's share my screen. All right, we're seeing a chart of the S&P 500, courtesy of MarketSmith by Investors Business Daily. We're looking at
What do you see
SPY.
here, Ivan? What do you see? What do you see?
I mean, that 280 level, apparently it matters to enough people and enough algorithms that we're having a slight pullback. And in general, there are two types of market corrections, like garden variety shallow corrections that are usually 4, 5, 7%. And during those corrections, there many momentum stocks are holding well and building new bases. And then we have a much deeper corrections, like 10, 15, 20%, where most momentum stocks get seriously hit and go down 30, 40, 50, sometimes 80% in very quickly. And based on the price action in the momentum stocks, I think we are currently in the first one, a garden variety shallow correction, because there are quite a few momentum stocks that are just going sideways in a tight range, just building new bases, while the S&P and the Russell 2000 small caps are pulling back. What do you see?
Yeah, I mean, I think still see it, right? Like money's coming out of FANG. Google feels like the strongest, all in all. It didn't go up the most during the boom, and just kind of building a base of just long base. If you take out the early part of 2018, but yeah, I mean, the money's just with low interest rates, the markets, the indexes may be stalling out here, but the money's coming out of some of the bigger caps, but it's hard to be bearish here. So I feel like it's a stock pickers market. The beginning of the year was a great year for the index. I think they're still having a great year, but the banks have stalled. The Nasdaq stalled a little bit here, and so I think we got to look at the underlying strength. If we go to our market wisdom momentum 50 list, I think you see where the strength is. I think the software enterprise stocks have kind of slowed down. I mean, they're in uptrends, but if you look at just the top three stocks on our list, right? I would say 99% of the maybe 4, 5, 6, 7, like other than Chipotle's, maybe Etsy, the top 15 stocks on our list of maybe 99% of the investing public's never heard of them. So that's good, right? Like we're out of this FANG world and that's what happens, right? Everybody owned after 3 years of seeing those stocks on everybody's list. They're not on any, they're still over-owned, and we see all these new companies from Twilio to Zendesk. And I think the most interesting one is the Trade Desk, TTD, which has just had an incredible run since it showed up on the list, which is kind of like, it's a matching platform for digital, stock, for companies that want to do self-serving ads. Recent IPO a couple of years ago. It's up 500%, 600% since its IPO.
They're almost 1,000%. Look at this. All right.
Yeah, I know some of the Roger Ehrenberg's a friend of mine, and it just kind of missed this. I mean, I remember when it was a seed investment. So look at the earnings growth. For people, this is why stocks go up. If you look at their earning growth, it went from a penny in 2014 to $3 in 2020. That's how you get, a 20 bagger in the stock market. In the stock market, it still comes down to earnings. And that goes to, a lot of the stocks on the list, Ivan, they're biotechs, and it's hard for me to own them personally because they don't get that earnings like a Trade Desk or the software companies that I own. So let's go back to the top three names again. Zscaler, security software, cloud security, ZS. And, we love this sector. This has been the winner. This has been the security winner. It's a recent IPO back in 2017. Full security stack. You won't hear its name, talked about in most places. And they just started earning money last year, or they're expected to earn money this year. So it's a big year. They got to put up. And it's not cheap by any means, but unlike a biotech, it's moving up. And it's $7 billion market cap, Ivan.
Yeah, 7.4. Yeah,
it's not a little company, but the institutions absolutely love it, and high relative strength. This is, did it get out of the list when, Ivan? I mean, it's moved really quickly.
It's been there 13 weeks already, so it's already up 50%. And after they beat estimates, look at this, they beat estimates by 1,000%.
Yeah, if you want to follow this list in real time, obviously.
What happened? Howard, your screen froze. All right, Howard appears to be having some internet issues, so we'll finish without him real quick. Ever since Zscaler gapped up on earnings, and you can see why they beat estimates by 1,000%. They gapped up, finished near the highs, and while the S&P was pulling back, Zscaler just built a new base, and now it's setting up near its all-time highs again.
Sorry, I lost you there for a sec, Ivan. Which stock are you on?
Oh, I'm still talking about Zscaler because for a minute your screen froze and we were not able to hear what you're saying. But yeah,
let's go back to listen. Look at biotech as another example. Sorry, I think that my room Wi-Fi is they're rate limiting me. So CareDNX, you talked about it last week, Ivan, on your blog. It's been on there 2 weeks, had a huge run, breaking out. And trying to do some work on this. It's for transplant recipients. So you can see it was just kind of a small cap stock through 15, 16, 17. It once it got above $1 billion, I think. You can see started real trading here in 2018. Big breakout.
Yeah, significant breakout on a really weak market day. That's why it stood out so much. And then after the breakout, the next day,
a perennial money loser. If they, again, not just going into the green this year, 11 cents expected, then 60 cents expected. So not cheap, but you can see it might even have been a shell company. I can't tell.
I don't know. This is how it looks like since its IPO.
But they've definitely either they were ahead of the curve or figured out a new business. But pretty cool. Pretty cool. No. It's definitely used for transplant. Okay. So anything else stand out? So it looks like smaller caps, even though the small cap index is kind of underperforming, smaller cap biotech and software companies seem to be leading the way over the behemoths. So I think that's interesting. It's a nice rotation. Risk remains on, but yeah, money is coming out of the big caps and even the large cap, small caps. towards, billion to $5 billion companies, which by no means are small companies, but they're not the $100 billion behemoths that everybody's been trading, which may bode poorly for the IPOs, Ivan, that are coming out, all these huge IPOs that are coming out, meaning they'll get public, but they may not trade well if this type of market environment persists. So we'll see.
I think the market is starved for growth, because there's so many companies that are just getting acquired, and it's so few companies go public nowadays that any new issues of companies that are growing fast will be welcomed. And of course, how they perform, it will depend on the market. If it's a strong market, don't chase. And if you're a long-term investor, the best thing that can happen to you if those companies go public when the market is down, because you get a lot better entry.
Yeah, I think the problem for the public markets in general is just it's become pretty politic, with the Fed, and we saw it in December, with the president kind of pressuring the Fed. It feels a little more rigged than usual the last, I don't know, 3-4 years, and a lot of the smart money is moving downstream into angel investing. I have this thing where talking to people lately about, startup investing is the new stock market investing. And, these young people don't mind about being locked up for 10 years. They've seen their friends get rich. They understand how software works. They understand how networks work and network effects in the cloud. And, it's very frustrating, and for kids to just index, and there's 401ks are on the decline. There's so much going against the young people getting into the stock market, other than the fact that there's some great fintech products finally coming out like Robinhood. So we'll see. Ivan, anything else that kind of pops out at you?
I mean, it's funny that you mentioned about comparing indexing and angel investing. Last week, we had a 10-year anniversary since the bottom of the Great Recession in March 2009.
Mm-hmm.
And I wrote a post actually about it, about the performance. Let me share it real quick. About the performance of individual stocks and the indices since then. And as you can see, the S&P 500 I think went up 400% the total return. But look at this. In the last decade, there were 235 stocks that went up more than 1,000%. We have 14 stocks that rose more than 5,000%. So we actually, big market correction actually help people to achieve angel investing returns while not being locked up for 10 years, while having the liquidity. So it's not like that the market doesn't offer any more good opportunities. You just need to learn how to pick stocks, and more importantly, you just need to learn how to hold them or how to trade them.
You need to learn how to hold them. I think you need to find historically companies that have earnings. Obviously, it's very hard to buy stocks that go up that don't have accelerating earnings, as we've seen with like the Trade Desk, or with Google or with Apple. So it's not so easy to pick stocks. I mean, stock picking is much more mechanical than angel investing, because we have data on earnings and financials and institutional holdings, etc. And there's context comparing public companies from market cap all the way down to PE ratios and all kinds of balance sheet ratios, etc., and financial ratios. So I think the younger creative mind, the Etsy generation, the Robinhood generation, longs for more creativity. And like you said, I think a market correction, much as I hate them, is going to breed the next humongous winners. It's been an incredible, 5-6 years for the markets, and hope it continues. There's some great names, as you see, showing up, but we will be back next week, Ivan. I might still be overseas, but we'll get it done next week.
Sure. All right.
All right. Have a great week.
You too.